All right, and we are live. So welcome back to Dapp University. So today we got a lot to talk about in our live stream. First and foremost, we're going to look at the crypto markets because I'm sure that's something that's on top of everybody's mind as they're waking up, checking their phone this morning. Hey, why are we seeing a massive sea of red out there? We're going to talk about that, what could happen in the short term, and should you be worried? Okay. We're going to look at that. We're going to look at a lot of the news updates that have happened in our space since our live stream we did on Friday. Some big, blockchain trends that are popping out that you definitely want to pay attention to, some developments in that. We're going to answer some of your questions and a whole lot more. So if you're new around here, hey, I'm Gregory, and on this channel, I turn you into a blockchain master. So if that's something that you're interested in, then smash that like button down below for the YouTube algorithm and subscribe to this channel. And if you want to learn how to master blockchain step-by-step start to finish, then head on over to dappuniversity.com/bootcamp to get started today. All right, so we got people jumping in the chat here. Let's see here. We've got Culture Hives, we got Vale, Patrick, Lee, Roman, hope I'm saying that right, Meta Shadow, Robert, Mandingo, Alan, Shay, Zayshar. Welcome. All right, so let's jump into this. Let's look at the crypto markets because I think that's, like I was saying before, one of the things that's top of everybody's mind. So wake up this morning, hey, why did we see this massive sea of red over the weekend? So, real quick disclaimer on this. None of this is designed to be financial advice till you buy and sell cryptocurrency based on this information. All right, and so let's go ahead and jump into this. All right, so as always, whenever cryptocurrency prices go up and down, there's rarely like one single cause that is determining the direction of the price at any given point in time. There's always multiple factors involved, okay? So let's talk about what those factors are because clearly they are all working together to create a tipping point for what's been happening with the crypto markets. Let me just pull up my chart on my screen here. We can see that, let's just see here, hold on. We see that Bitcoin's currently trading about $40,000 level, all right? $40,767,000. We have broken down below the bull market support band, okay, below all of our long-term moving averages, and things look pretty bearish for Bitcoin in the short term, okay? So let's talk about some factors that are on the table. So the first really important thing to understand is that what's happening in the crypto space right now is definitely not in isolation. This is not a crypto-specific problem. If you look at what's going on with the stock market, we of course are seeing poor performance across the board. Let me just pull that up here. Let's see here. We're seeing poor performance in the stock market across the board, okay, especially in major stock indices like the S&P 500. But if you pay closer attention to particular stock indices that are much more closely correlated with what's happening with crypto, you look at the NASDAQ 100, what's going on with tech in particular, okay, you see a really similar pattern to what's happening in crypto. So let me just pull up the 6-month chart here, year to date. All right. So the first thing you have to understand is that basically, we're seeing very similarities, not a crypto-specific problem. So that makes you think, okay, beyond that, what are some of the major factors? So we're seeing more, over the weekend of escalations and conflict with what's happening in Europe, okay, especially with Ukraine and Russia. I don't think that we're out of the woods yet on that particular conflict by any stretch of the imagination. Seeing more developments of that over the weekend, although we are seeing potential light at the end of the tunnel for that type of thing, but we'll just have to wait and see. I don't claim to be an expert in international affairs, foreign policy, anything like that, or what's happening on the ground over there. I do know people are affected by this, okay, so I want to be very sensitive to this conflict. A lot of people are, undergoing insane, like it's just absolutely insane. So be very, very careful how I talk about that, but that's definitely one of the major factors at play, okay? So the other thing is definitely what's going on with the uncertainty around the monetary policy. I think more and more people are watching what's happening, with the Central Bank of the United States, looking at bond yields, looking at what's going to happen with interest rates. And we have, some meetings and more details about that this week. We're going to look at that on the schedule here in a minute. But another big factor that I don't think a lot of people are really talking about that much is just taxes, okay? So we do have taxes coming up due in the U.S., pretty soon, and there are a lot of people who say, hey, that's not got nothing to do with it, like tax selling happens at the end of the previous year. Yeah, but there's a lot of people who wait and pay the taxes. You also will say like, hey, people are just going to file extensions, but I do think taxes are also a factor that I don't think it's one of the primary things that people bring up into the equation here. But regardless of what all the factors are, because nobody really knows for sure. There's no way to just pry open the mind of every single person who's hitting buy or sell and, asking them why they're buying or selling. And even if they did, you don't know if they're lying to you. And even if they did, you don't know if they're lying to themselves. So very hard to tell, but those are some of the top factors that I read from sort of my assessment. All right. So let's look at potentially what could happen, to the crypto markets in the short term. So we did see, another Arthur Hayes article come out calling for more crypto carnage, looking at downside targets of Bitcoin close to $30,000. If you've been watching YouTube or, Twitter this morning or anything like that, you've probably seen this number floating around quite a bit. That's where it's coming from. It's coming from Arthur Hayes. We looked at an Arthur Hayes article last week who was also talking about, Ether trading north of $10,000 in 2022. Let me just see here. Sorry. So you have to take both Arthur's predictions kind of in tandem with one another. Arthur's talking about short-term carnage for crypto. All right, he's not talking about necessarily long-term. All right, when he's talking about these downside price targets. And I don't think what he's saying here has negated any of his longer-term price targets for 2022 itself. And don't forget, if you've been following Arthur at all, he talked about he put out a post, I think it was the end of the last year, talking about, hey, the party's over, central bank is about to start raising rates like crazy, and things are about to get ugly. And that basically happened. He came out and talked about ETH trading north of $10,000 in 2022. Of course, we haven't got to the end of this year yet, so we don't know if that's going to happen yet. But then he comes out with this in the short term. So let's see how accurate his predictions end up being. All right. So let's kind of look back at the price and see, what do I personally think? Okay. So, should you worry on this stuff? So, of course, it does not look great that we see Bitcoin falling below pretty much every single moving average that you would need to hold in order to stay bullish in the short term on the price. Okay, 100% straight up honest, that doesn't look good. Now, does that mean it's doom and gloom and that everything's about to just tank down to zero? I definitely don't think that's the case by any stretch of the imagination. Of course, not financial advice. Something could happen, but the likelihood that crypto goes to zero is basically zero. Okay. So the other levels to keep watching in this are, can we hold any of these other higher highs support? Right now we're forming a candle body down below that, so we'll just have to wait and see. So one, like I said, I don't like to do a lot of short-term price forecasts on this channel. I like to look at the big picture, start to think about that type of thing. But one important thing to understand is, whenever we go up and test these moving averages in the past, many, many, many times, it usually takes a couple of tests to break through them before we actually firmly get above them and, hold them as support, which is what you really want before the market kind of gets, back into a roaring state, a roaring bull market. Okay. So, the fact that we got a rejection here and are seeing a correction, I don't think is like a absolute confirmation that we're going to Goblin Town or anything like that. We would need time for that really to play out and be confirmed. So, should you worry? I mean, I'm not really worried. For a couple reasons. Number one is I got a very long-term outlook on the crypto markets in the first place. And number two is I don't treat, crypto as the only shot at making, a life-changing, benefit off the Web 3.0 space. And that's not really what I try to help people do on this channel. At the end of the day, the big upper side, the big massive opportunity staring everybody in the face right now at 3.0 that most people just aren't even considering is, a lot of people watching this channel are, but most people who are looking into crypto is getting involved in the industry. That's where all the upside is for most people. The upside that has the most likelihood in an actual life change. Okay, so we're talking about landing a highly paid blockchain job. Most people hate their job now. They're not making what they want to. There's so much opportunity to get into industry. You're working on interesting, exciting things, work remotely, get paid and many times twice or more what you're currently making at whatever job that you don't like. And when crypto prices go down like this, that's another way of saying hey, this is not something that you should always be betting your happiness and your long-term future on, because so much outside your control, completely outside your control. But what's way more within your influence, right, is how you spend your time and how you develop yourself. And that's exactly what I want to help everybody do on this channel, is to do that, break in the industry and have a much more, meaningful life with opportunity. And that's what the big opportunity is in Web 3.0, in my opinion. I'm not saying you can't invest in crypto. I hold crypto. I think crypto's a great long-term bet, but there's, it's a bumpy road along the way, and that road is completely outside your control. So that's my outlook on it. That's the should you worry component for most people who are watching this channel. Okay, so let me know what y'all think in the comment section below. We got a lot of other big stuff coming up down the pike this week that I want to talk about, but let's just take a quick peek at the live notes here. Somebody says, believe a healthy higher low for bullish continuation in crypto and stocks. Let's see, is it possible to have a fintech-based app altogether? I'm a yes, definitely. All right, so let's look at a bunch of other updates that are happening this week, okay? So looking here, busy week incoming, all right? So tomorrow at 8:30 Eastern Standard Time, we get U.S. CPI data, all right? Expected 8.4% year-over-year headline with 0.5% month-over-month core, okay? So it'll be interesting to see how the actual numbers line up with projections, okay? I think that's going to have a likely impact on people's outlook. On Wednesday, Q1 earnings, let's see here. We'll see if we have any impact from Russia on that, okay? Taxes are due. That's like I was saying before. On Friday at 2 p.m., this is the important thing, especially for what's going on with the Ethereum ecosystem, is we have an important ETH dev call. We will likely get more info about the much anticipated merge. All right, we might even see some timeline updates on that, which is something I think a lot of people are hungry to find out. So, the merge is basically, we're moving to Ethereum 2.0, and even that name has been kind of rebranded. I still say Ethereum 2.0, so we've called it for a very long time. That's what a lot of people still know it as, even though they're trying to change the name. So basically the merge is like we have this separate Ethereum that's going to be on proof of stake over here, right? We're going to merge it back into Ethereum 1.0 that's known and used today, okay? And basically that's going to make ETH deflationary, assuming that the network activity stays the same, because we're going to be burning more ETH than is created by the blockchain whenever new transactions are created. And so one of the most highly anticipated events in the entire history of, Web 3.0. And people are saying, hey, when's this going to happen? Okay, we had, some announcements and talk that it was going to happen in Q2 of 2022. I made a video recently saying I didn't think that was going to happen. I thought it was actually going to get pushed back, probably into Q3. And, this Friday we might see some updates on whether that's going to happen or not, because a lot of people think merge can be a really bullish catalyst for the entire crypto space. All right, give you something to look forward to. The fact that it's going to become deflationary. And of course, there's a lot of people who want to buy the rumor, sell the news. We'll see if that ends up happening too. Somebody says the Dapp University is great. The 13-year-old son used it for arbitrage contracts. Awesome. Very cool. We got 13-year-olds doing arbs out there. Seeing lots of more stories of people actually killing it with arb bots. We had, we did this story a couple weeks ago of the developer did $820,000 single transaction, and we also had, it wasn't. I guess you could call it arbitrage with the. It's not like a trading bot, but they did the Bored Ape flash loan, airdrop claim. Of course, there's a lot of controversy about that. Was it stealing the apes? Like I said, I'll let you all do that one down in the comment section below. But basically, the Bored Ape Yacht Club NFT project dropped a new cryptocurrency, the Ape Coin. Okay, and whenever ApeCoin was dropped, you just had to hold a Bored Ape in order to get some ApeCoin. And you had a developer figure out that you could just flash loan a bunch of apes. Of course, I'm pretty sure he had to buy an ape to get this, but he could flash loan a bunch of apes and then hold them for like, a single transaction and claim the airdrop and then instantly pay them back. That was pretty crazy. I think that was end up being, no, that was the $820,000 ARB. Sorry. There was the other one that was 30K per day. I got the numbers back mixed up. It's been a while since we talked about them. I'll make another video detailing that in depth because people are like, hey, how does that happen step by step? So we're going to do a video about that next week. We'll break it down step by step how that happened and how you can, learn those same resources yourself. I'm actually curious to see what's going on with this as well. Okay, so another thing that came up that people are talking about in the news today that's somewhat related to crypto, it's a little bit different, but we talked about it in our live streams, is basically Elon Musk reverses decision to join Twitter's board. Okay, so this let's tell how this is loosely connected to crypto. So, Elon Musk joining Twitter. We talked about this in a live stream recently, but I'll catch you back up. Basically, Elon put a tweet out a while ago talking about how Twitter's, he put out a poll and said, should Twitter's algorithm be open source? Like, yes or no? And like people, I think like overwhelmingly voted for yes. I don't know if you go find the tweet and fact check me on that one. But then we saw like Elon talking about, buying into Twitter and then like, moving towards Twitter's, board. And now the decision has been reversed. So Elon's not going to be on the board. So we'll see if it gets reversed again. If we reverse the reversal, this is sort of like a reality TV show playing out before our eyes. Big corporate decisions. So anyways, why is this related to Web 3.0? Well, basically, we're talking about, social media and the big problem with it. One of the big problems is the algorithm is a black box in general, and there's a lot of people that can trust it. And we even saw, a tweet from Jack Dorsey talking about this. Let me pull it up on my screen here. So basically, Jack talking about, former CEO of Twitter, talking about the days of Usenet, IRC, the web, even email were amazing. Centralizing discovery and identity into corporations they really damaged the internet. So he says, I realize I'm partially to blame for this and regret it. So my words added there. So basically, he's talking about the early days of the internet where you had like IRC chat, all this type of stuff. Before you started putting stuff like identity management and discovery into centralized hands. So with social networks, all right? Because before, how did you find out about stuff? You had like email threads, right? You had IRC channels. You had like message boards. You had all this stuff, and ideas and new websites, links to like happen way more organically. You could like build links on different websites, right? And so what he's saying is then social networks took over, and you have a massive problem with this centralized power. Like now you got, you got all these different centralized companies like that do social media or even search engines, right? That are responsible for what you see, right? For what you see. And there's a problem with this because these things are very algorithmic, all right? The algorithms can be trained by artificial intelligence that is affected by human bias, okay? It can be trained by algorithms that just optimizes for things that aren't good for people, to see. They can be manipulated entirely. And so, one of the promises of Web 3.0 is that you could create an alternative to this. And that's sort of what Jack is saying here. I'm not saying he's advocating for Web 3.0. It's not what I'm saying. I'm not putting words in Jack's mouth here because he's definitely a hardcore Bitcoiner. I don't think Web 3.0. Would love to have Jack on the channel to clarify that one. But one step in the direction of that Web 3.0 idea that doesn't necessarily even have to use blockchain out the gate is just open sourcing the algorithms themselves so that you can see how they work. Now I know that opens up all kinds of questions on like, hey, if you just open source the social media algorithm, then people are going to know how it works and you can just game the system, right? So I want to know what the answer to that is. We've seen some people talk about, well, you could say that the algorithm now, like, I don't know, like maybe there's constraints on, who's affected by those particular algorithms. Maybe you have algorithms that apply to news networks. I don't know. Like if you have a compelling answer to that one, let me know in the comment section below. But yeah, that's kind of how this is connected to Web 3.0, and we actually see that here. This is the Elon Musk I was talking about before. Twitter algorithm should be open source. Yeah, it was overwhelming. Yes. So anyways, we'll see. We'll see if Elon's got the influence now. Sorry, I dropped my Apple Pencil. We'll see if Elon's got the influence now that he's not, going to be on the board. We'll see if any of this stuff gets walked back. Let me know what you think in the comment section below. Does this even matter? Are we going to see Twitter become the Web 3.0 social media app? We've already seen Twitter move towards tipping with Bitcoin, letting people have NFTs. It's already championing itself as the free speech platform, which is kind of ironic in some cases. Let me know what y'all think. So Mark is saying, yeah, that's what my kid uses flash loans and arbitrage. Yeah, we're talking about the flash loan stuff earlier. It's not limited to 15% ownership by the company. These are resources. It's a funny comment down in the comment section. I'm not going to read it on camera. It's awesome. Let y'all look at that one. Somebody says if he joins the board, he can't own more than 14% of a company. Yeah, I see somebody talking about that. So, I'm not like an expert in like securities laws. So I don't know if that's comes like out of SEC regulations or what. Let me know what y'all think down in the comment section below. Don't pretend to be an expert in this area, but let's just take it at face value, right? Let's say the limit's like 14%. So is the play here to basically forego being on the board to own more? It might. I don't know. Somebody says if Twitter wants to be more involved in Web3, they should not restrict NFT verification to Twitter Blue users. So that's an interesting point. So right now, if you want to verify your NFT on Twitter, then you have to be a Twitter Blue member. Let's see here. So will social media go blockchain? So I do think that sort of the Web 3.0 space. I think social media is is a strong candidate to see some sort of Web 3.0 technology flourish. Okay, what are the values of Web 3.0? And I say Web 3.0 is not just blockchain because there are things that you could use outside of blockchain technology that could make something more Web 3.0. The whole idea is moving from Web 2.0 to Web 3.0 to where it has more values of a new wave of the internet, which is decentralization, transparency, trustlessness, all that type of stuff, censorship resistance, okay? So you don't have to have all those things in order for something to be Web 3.0 rather than Web 2.0. So like I was saying before, if you created a Twitter where the algorithm is open sourced and you could verify that that's the algorithm that it was actually using, okay, then that would be Web 3.0, even though it's not blockchain itself. So how could you verify this sort of information? Well, most probably like average people couldn't verify that it's doing that. But if you could have independent third parties audit it, or just people who are technically proficient audit it itself, okay, then you could have something that's, transparent. So let's just think about how you could accomplish that, okay? So let's say that you had let's just do a thought experiment here. How could you make a decentralized Twitter, all right, that embodied the values of Web 3.0, like in depth, okay? So here's my Twitter newsfeed, all right? Here's what's on my timeline, and here is what's on the trending page, okay? So let's take two different algorithms. You got your algorithm that determines what you see from the people you follow versus the algorithm of what you see on like trending, okay? So the algorithm for people you follow is going to be the easiest thing to audit because it's probably the smallest amount of data. All right, so let's say that Twitter published its algorithm and made it open source so that you could see how it works. Because one of the problems with like social media now is like even if you follow people, like you might not see their stuff because Twitter's not what do you call it, like a linear timeline, like you don't see the posts in order they're published. My brain's a little bit sleepy today, so I'm having a hard time getting on my words quickly. So anyways, like Twitter's not a linear timeline, so it's algorithmic, right? It just shows the stuff that's the most engagement at the top, and that keeps you hitting that refresh button so you always see more stuff. So how could you audit it? Well, you could basically have something where you could pull down all the linear timeline as it's published, all right, sorted by the publish date, descending, and then you could just take the algorithm like on your computer and then like run it and then put it in there and see if it produces the exact same result that you see on your timeline. That's how you audit it, So not average people aren't gonna be able to do that, but technically sophisticated people can do it, and independent, auditors can do it. So take that to the next step, like take it for the trending sidebar over here, right? Like you see this stuff, right? How do you know that this is trending, right? What if you think that like that's not trending? Well, you do the same thing. You could just look at all the tweets that are coming out of Twitter and then run the algorithm on it and see if it produces the same result. Now, it's a little trickier because that's a lot of data, all right? And it could have a look back period like to determine how much whether it's trending or not. So that was a little more complicated. All right. But there could be ways where essentially, a third party could audit that, better than like just an average person who just pulls it down their computer and tries to run it. Okay. So, that gives you that next level with Web 3.0. Because like, let's say for that other thing, like you want to, verify that Twitter's actually saying what they're, all their posts are trending. Well, you probably got to have API access. You got to have an API token. It's probably going to be rate limited, and you still got to trust that whatever's coming out of that API is actually what was posted to Twitter. So, because they can deterministically just give you data and then show you what their algorithm is that like produces the same result, even if it's not really what's happening. So, you could put all the tweets on some sort of you put all the tweets on a ledger of some kind or on IPFS or something like that, right? And that's going to be the thing that takes that to the next level to where you have the protocol that's, runs on chain, and then basically all the data is there, and then all that data can be used to generate the social media app that people consume and read all the updates. So we're not quite there yet with the technology. There's still limiting factors. We got scaling issues. We got all kinds of issues, cost issues. I'm not saying those things cannot be overcome. But yeah. But here's the other thing. Decentralization, Web 3.0 values, censorship resistance, trustlessness, transparency, all that type of stuff. It's a sliding scale. Sometimes there's no solutions in life. There's just trade-offs, right? And you try to find the best trade-off that you can get. And And could you have a benefit of a social media app that was more transparent than what we have now? Even if it's not perfect, even if not every tweet's stored to a blockchain, you might be able to. Somebody says, I highly recommend starting with Solidity if you want to be a smart contract programmer. Learn what you will use the most, definitely, and learn that first. Somebody says, is it possible non-IT background can become a blockchain dev in under 6 months? Yes, it is possible. It will require a significant amount of work and dedication, but it's definitely possible. All right, everybody, that's all I got for today. As always, smash that like button down below for the YouTube algorithm. Subscribe to this channel if you haven't already. That really helps these videos out so that more people can learn about blockchain. And, if you're as fascinated with this technology as I am, you want to get your hands dirty, how can you get started today? You can go to my YouTube homepage. You can find my free courses there. They're like Udemy courses, but they're totally free. And if you like those and you want to take the next step, or hey, maybe you want to take a master shortcut entirely, I can show you become a blockchain master step-by-step start to finish over at dappuniversity.com/bootcamp. You don't have to be an expert to get started today. I've helped people with zero coding experience become real-world blockchain developers in a matter of months. So that's all I've got. And until next time, thanks for watching.